Monday, December 21st, 2020, Maneco 64, home of alternative economics and contrarian views. So we're seeing precious metals rise quite sharply this morning. Silver's leading the way. The gold-silver ratio is testing key levels. I've spoken about how in major precious metals and commodities bull markets, silver leads the way and outperforms. And I think we're gonna see that again after a few months of consolidation in the gold-silver ratio. Before I go further and look at the markets, there's some news out this morning that they're using to justify the move in currencies, of course, and probably even the precious metals. And it's to do with this new variant of this thing that I don't need to really talk too much about. But yes, right now it looks like the EU countries are banning UK travel and also halting channel freight because of this variant. This is quite serious, I guess. I've heard from someone who follows me on Twitter. He thinks, isn't this convenient with all the Brexit negotiation? This could be a cover for something more serious. This could be a cover for Macron, the French president, saying we're going to close the border if you don't agree to a deal. And I think he's capable of that, because we heard from earlier this year when this pandemic started that if you remember, if you're here in the UK, Boris Johnson was thinking about not having a lockdown. He was thinking about following the Swedish model of herd immunity. And at the time we didn't hear it, but the story is that Macron threatened to close the borders and close all trade like they're doing now if we didn't lock down. So I wouldn't put it past them. So it could be more serious. This could be just like a cover, I would say. But be as it may, we've seen, so now to the markets, of course. So there's also the passage of the stimulus bill in Congress. I think it's pretty much agreed, about $900 billion. They're going to vote on it today. That hasn't really made too much difference. In the markets, we're seeing the pound making a big move. It's down almost 2%, 1.75%. It's at 132.93 right now. The low has been 132.64. Precious metals, silver is definitely broken through that 26 level. It's very volatile at the moment, though. We've been as high as 27.43. That's how silver can move. Right now it's 26.64, up 3%, 3.3% to be exact. It's 8:09 a.m. London, by the way. Gold is at 1896. We've broken through the 100-day moving average, as you can see here. The high has actually been 1907. And the low has been 1879.70. So precious metals are doing really well. Let's quickly look at the other markets before we go on to the gold-silver ratio. The Dow is down 100 points. The Dow future, 30,090. S&P is also down about 1/3% at 36.96. The NASDAQ 100 future is up slightly. The FTSE is down almost 100 points. Cable, as I said, is down about 1.8%. Even the euro is down about 2/3% at 121.84. So you see, there's a bit of a catch-up on the part of precious metals versus the non-dollar currencies here, because lately we've seen the dollar be very weak and gold didn't do much, so that didn't help gold versus the other currencies. So we're not really seeing gold go down as the dollar rebounds here because of this crisis, so to speak, in Europe. And that's quite interesting, and that's why gold right now, in terms of pounds, is up over 30 pounds. It's at 14.26. So that's the situation there. Dollars up versus the yen 0.25% at 103.55, and the dollar is also up a little bit versus the yuan 0.25%. On the commodity side, we're seeing copper down just under 1%, and we're seeing WTI crude down about 3%. So gold and silver are actually doing a good job here in these uncertain and volatile times. So now let's have a look at the gold-silver ratio and see how it moves as it pertains to major bull markets in gold and commodities. As you can see here, back in the beginning of 2003, which was a little bit after the beginning of the move in gold and silver, but it was really when silver started taking off, we saw that ratio went from 80 all the way down to 46. Back in 2006, it bottomed around just below 50 in 2008 when gold topped. And then again, when gold and silver corrected during the Lehman crisis, when gold dropped from like just over 1,000 to just below 700, that ratio went back up to 80. And if you look back in 1996, 80 was a good resistance as well. So 80 has been always a key resistance in that ratio. That's when there's a correction in precious metals. That's when silver underperforms, and you need more silver to buy gold, 80 ounces to buy 1 ounce of gold. As you can see here, back in the beginning of this year, that ratio went to a level never seen before, almost towards 130. I think the high was around 128. But we're back now below 80, which is a key level, of course. It was a support on the way down, broke through that very easily. And right now, there seems to be a support around 69, and we're around 71. So where could that ratio go next? And how long will it take? Well, I think it's going to probably take as long as the bull market in precious metals continues, and I think that could be another 3-4 years, and also commodities. So as you can see in 2011, when we had the last major move in precious metals, when gold went up to 1920 and silver went up to close to 50, that ratio got to around 32. So I actually think that in the longer term, we could see that ratio at least go to 50, which was a key level in the 2008 top, and even 32. We could even go through 32 and maybe go to the low 20s or mid 20s in the gold-silver ratio. I'm not going to speculate to where the price is going to be. I've done videos before talking about how silver could go to 400, and I'm going to put it up in the card so you can watch it, and how I came to that number by extrapolating back to the 1970s bull market. So yeah, that's where we are right now. What about the bond market before I finish? Well, the 10-year yield is down this morning 4 basis points at 0.91, and yeah, I think we're going to see a lot of volatility, not only in the currencies and precious metals, but also the stock market. Yes, things are getting quite interesting as we move towards the end of the year. Usually the end of the year, there's less liquidity, markets are thinner, but I actually don't think it might make much difference this year, because a lot of the traders, investment managers, they're not going really anywhere on holidays, especially here in Europe. So they could actually be at home, and markets could get quite busy, which is ironic situation, because usually under normal times, markets do get thinner and more volatile, but we'll have to see anyway. So there you go. So yeah, Billy has been up. He doesn't sleep all the time. He's even been out this morning already, but when he gets on that sofa, he just goes to sleep. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter Parler, and all these other platforms below here. I wish you all a great day. Take care. Bye.